UK banks start reporting earnings this week. What are the prospects? Is it a sector that attracts our next guest, James Bevan from CCLA? James, welcome.
Good morning.
PPI seems to have returned. Certainly some of the news headlines suggesting perhaps possibly maybe we could well see at least one of the major banks putting aside more money this week. IT problems, low interest rates. Is it a sector that we should be interested in?
Well, I believe we should be interested, but very selectively. So indeed, we begin the week with Lloyds. Lloyds, I think, are going to have good results, but perversely, that's why I would not have it as a stock pick. Because I think all of the good news in terms of their share of the mortgage market, how they have been coping with the UK depositor base, that's all going to be there. We're going to see margins rise. I expect net interest margins of 2.94%, modest increase on the last quarter. And generally, therefore, people will be positively surprised. But then I think there's the question of what next. And for Lloyds, I think it's all relatively speaking downhill. In contrast, I see better news from the other banks, all very different in terms of the major players this week. So we have RBS. There, I think we're going to be looking for comments on the resumption of dividends. And you may go, golly, a dividend from RBS. But actually, I think they'll pay 5p this year, 10p next year, 15p the next year after. And therefore, we will see a progressive shift back to people thinking, do you know RBS really can run itself? It can make sensible returns. It is going to get out of the problems that it's faced in terms of litigation and regulation. Of course, we then have Barclays. Barclays, for me, is the pick in terms of forward-looking prospects. Not least because we have this very interesting trade-off between the investment banking side, which has been doing reasonably well, but also the reduction in impairment. And I'm looking for real news on reductions on impairments and therefore better through flow to shareholders. In the case of HSBC, there we have a bank that is much more international in nature. It will certainly have benefited from the recent strength of the dollar in terms of what is reported when translated back into the pound. But I again worry that it's going to have a very tough act to follow in the quarters ahead because the international banking segment is oh so competitive.
I want to pick up, if I can, first of all on Barclays. I think it's an interesting point you mentioned there. Edward Bramson, this activist investor, has taken, I think, a near 5% stake in the bank. And he wants to, I think, downsize the investment banking part of the business. We already know that Barclays has already divested itself of its African business, and it's already sort of downsized some part of that business in any event. But he thinks the big profits to be made in the retail banking side. Do you agree with that? Do you think that Barclays ought to be looking in more detail about being more selective about what it does?
Well, I think from a shareholder's point of view, the fact that the pressure is on the bank to be focused on maximising long-term sustainable value is terribly important. Whether they should actually exit the investment bank, I'm much less certain, because when I look at the underlying profitability from both fixed income and from equity over the long term, that should be a great supporter of long-term shareholder value.
But it's the same story, I guess, to some degree of most of these banks. HSBC, of course. RBS has investment banking business as well.
But Barclays is a country mile ahead in terms of the quality and depth of its operation. So if you were going to bet on the long-term future of investment banking from a UK base, Barclays has got to be the name. And that's one of the reasons I think the shareholders should be very focused upon its prospects.
Got to talk about RBS as well. Interesting to know what this ramp up in dividends. That sounds quite aggressive. Is RBS in a strong enough position? Is the balance sheet going to support that sort of incremental increase in dividend over the next 3 months?
I certainly believe that
a substantial increase.
Indeed, and I'm certain that the free cash flow that bank can deliver will positively surprise shareholders. This is a bank that has been sorting out its problems behind the scenes, that has been getting on with making sure that the regulator recognises the progress has been made, and I'm certain that we will get regulatory clearance to maintain a return to the dividend in line with prior comments. What I'm really interested is to see whether in the statement they say they're going to pay the dividend at the final, or whether indeed they're brave enough to pay one at the interim.
Right, okay. Big picture, what does this tell us about where we are in terms of the economic cycle? Because banks obviously are, to some degree, a barometer of what's happening in the underlying economy. We've got an interest rate meeting this week from the Bank of England. Expectations in the market suggesting we could well see an interest rate rise. These banks have had to operate in very low interest rate environments. Is there anything that we can glean from what's happening with banks as to the health of the economy or how they could cope with a rise in interest rates?
There are two parts to the interest rate shift. There is what happens to short-term interest rates and whether that supports or reduces their capacity for profitability. The second is the so-called shape of the yield curve, which is the difference between short rates and long rates. Now, by and large, higher rates at the short end are good news for dragging in depositors, building up the cash. On the other hand, higher long rates imply more room for margin expansion because there is the typical issue of banks wanting to borrow short and lend long. So I'm looking not only for shifts in the cash rates, and I completely accept that it is highly likely we'll get a shift up in money rates this week. I'm more interested also in what happens to the 10-year gilt yield. And I find it impossible to understand why it is that non-UK investors are still prepared to fund this country's global deficits at oh so low rates when there are so many uncertainties to the economy. As to what banks tell us about the economy, I think not a lot. What we can observe are that most banks are global in nature, that the UK has been a slow coach in terms of economic growth trends. It is not a basket case. We will not see a near-term recession, but at the same time we're not seeing the real drivers for growth that justify a significant expansion in valuation. But the valuations of banks are low, so there's plenty to go for.
But they're low, presumably because they do carry a lot of debt. I mean, as a consumer, we've borrowed a lot from banks. This is what concerns perhaps maybe some quarters, is that if you see a rise in interest rates, do people then start to perform irresponsibly in terms of their lending or rather repaying lending that they've borrowed?
And indeed, the Bank of England is going to be very focused on the quality of the bank's balance sheets. There have been a very significant number of checks and balances to ensure that bank balance sheets can cope with a rise in problems in both the consumer and in the corporate sector. And it is quite right that the Bank of England is worried because, after all, since the global financial crisis, we have had some economies that have increased in debt far faster than GDP. Take Australia. Since the global financial crisis, Australia has piled on $2 Australian for every $1 new Australian dollar of GDP. That is extraordinary.
Right, okay, unsustainable.
Oh, totally.
Yeah. Back to the UK, Brexit. Does anything in the banking sector tell us about how Brexit is being embraced or otherwise?
Oh, I think Brexit is turning out to be a real challenge for the banks and the city generally. The premise that there will be the pan-European players pulling back to the continent, to the core European economies, is very clear. We've seen Deutsche Börse already saying that it's interested in the shifts in exchange activity. We've seen Deutsche Bank saying that it's going to pull back a lot of its activities to Frankfurt, and I think we're going to see more of the same.
Yeah, UK banks, though, headquartered here, I mean, they don't really have an option.
Well, when you say headquartered here, HSBC, of course, is a global bank.
That's true, actually.
And therefore, it's not wholly dependent on what goes on here. I look at Barclays, I look at the global breadth of that bank's business, despite that it is pulled back from Africa, and I see a huge opportunity to grow.
Do you think Barclays could ultimately be listed in New York, as been suggested before, perhaps maybe?
I think that is a real possibility, and this is another reason why I'm much more cautious than the street on Lloyds, because its domestic focus is a bigger challenge.
Yeah, interesting. OK, look, James, we've got to leave it there. Thanks
Thank
indeed
you so much
for joining us. James Bevan from CCLA on the banks as they approach their earnings season coming up this week. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.